Hey guys, and welcome to a new market update. Joe here from JCS-Charting. We have a quick look at the smart money flow of DAX. It sold since the end of May until the end of September, while DAX was stuck in a sideways consolidation. And then we started to rally to a new all-time high under smart money divergence, which we bought, by the way, and then DAX consolidated last week while smart money kept on loading up. Is that the start of a new breakout to the upside? Big guys are telling us to buy. I tell you what I assume, and we're going through my charts, and also we have a deeper look into the US markets. Let's have a look. We're gonna start off with the hourly chart at DAX. We do a little recap. By the way, I was away last weekend, so I couldn't do a video update. I also was in Osaka the entire last week, so members just got a morning and an evening update. But the levels I gave them, they worked pretty well. First of all, we had that blue sequence. I was also posting that on X. That 24,365 should be major resistance. That worked out once, twice. Here we almost hit it a third time before we sold off sharply with the US markets on Thursday. That got covered straight away. And then I gave my members 24,297 on Thursday. That got hit very precisely, just an overshot of 6 points. On Friday, and that gave us a nice shorting opportunity of 160 bips to the upside. Now the big question is, are we going to see a duplication of that selling leg, probably towards 24,036, or even lower? If that triggers here on the hourly close, we could see levels as low as 23,934. That would be the target if we see an hourly close below 24,036, or all the way down to 23,871. We have to keep an eye on 24,297. If we get the hourly close above, we're going to close these two fair value gaps here. This favors that green sequence up to 24,433 on this hourly chart. We jump into the H4 time frame, still the JFD indication. Here we got a potential inverse shoulder head shoulder pattern, the left shoulder, the head, and the right shoulder in the making. Now, that pattern triggers if we hit that slightly rising neckline once again, somewhere around 24,400, and that would trigger targets. The first target somewhere around 24,850. Also important to note here is that we consolidated 61.8% of that impulse here, of that 1, 2, 3, 4, 5 impulse from the bottom on the 17th. Once that happens after an impulse and we see a 61.8 retracement, that is usually a bullish setup for more to come. Now, on Friday, once we switch into the smaller time frames, we see here a symmetrical triangle, which is nothing else than contracting price, and that usually dissolves into a breakout. Either this helps us to run into that neckline, or we see another dip here, probably as big as that candle here to the downside, to probably retest 24,000 before we run up again. It's always a good idea to check on volatility. Here's the VDAX, it's the VIX of the DAX, and it runs the entire year very clean in these cycle brackets down here. The last low was suggested around the 8s. We made the low on the 9s, or here was actually another low on the 3rd. what we were looking for was just that breakout to the upside, and usually these breakouts are associated with two legs. So we saw the first breakout, a pullback, and then another breakout into the 17s. What also helps is once we turn on the Bollinger Bands, let me just, they are here. And most of the time, once they pop out of these Bollinger Bands, you see also how it was contracting here within these bands. There is usually a bottom associated with it, and that happened with that second breakout. So we knew there's usually a second leg, and then it was confirmed by jumping out of the Bollinger Bands once again. The next cycle low is into the end of November. Either we see a sideways consolidation, which gives DAX plenty of room to run higher, because as long as levels are kept below 20, bulls are definitely in control. If it keeps on making lower lows into the end of November, we could experience the next pop-up. That means all-time highs coming into a very strong bullish November and then being sold off again. We continue with the US markets. Here you see the Dow Jones and the Dow Jones Transportations, also called or known as a Dow Theory. Very large divergence on the weekly here from the highs of last year in November, and also once we switch time frames into the daily. Now here's a daily, and you see here the highs out of July at the Transportations. These were the latest highs. The highs from August, October, they couldn't get anywhere near these highs, while the industrials kept making new highs. Even on Wednesday and Thursday, we saw already two black candles here, a sell-off, and Friday we had an inside day, while the industrials kept making new all-time highs. This is a warning sign, and it keeps developing, and once that pattern here unfolds, we should see very, very strong selling. Now the big question is, when is that happening? I still expect we run higher into the end of the year, at least into the end of November. After that, we'll see. I would be very cautious after November with long positions, if I'm right on that. We have also a quick look here at the H4 time frame, still the JFD indication of the industrials. I was showing that broadening top here already in my previous updates, and the Dow hit already the first min target of that pattern. The 100% move is at 47,567. So this is still an open target. And what was here quite interesting is that sell-off we saw here on the 10th of October retraced 50% of that rally here, which we saw since the beginning of August, which is a bullish consolidation. And of course, afterwards we are always smarter. We are hitting new all-time highs. Let me just get rid of these lines. We had a red sequence which hit all these min targets on that Friday here on the 10th before the Dow reversed. I must say I was on the wrong page here as well. I started shorting somewhere here, and I am hedged now above 46,917, because that sequence we see here is also valid on the hourly chart, and it triggered for higher for a first minimum target of 47,402 up to 47,598. This is also my level where I will take out the hedges to get at least a bit profit out of that. So this sell-off as a 1, 2, 3, 4, 5, it looked like an impulse again, but it was nothing more than a pullback of that green bullish sequence. There is the next major bullish sequence starting at 47,636, which means once we break through 47,600, which should be resistance in the first place, could be another sell-off like that. If we break on the hourly close, especially on the H4 close above that level, we probably see levels somewhere around 48,500. Now here we got the hourly chart of the S&P 500. It's the main tool we work with every day. Plenty of sequences here in yellow, in green, and in blue. There was also another blue one which finished yesterday. And yeah, we hit already all these main targets of that smaller blue sequence here. And we were starting to hit the first targets of that yellow sequence at the S&P 500. I also was wrong here, by the way. I was short and I had to hedge. All this can be seen at my Discord above 6,720. We started to hedge our short positions. They are already on break even. Now I keep holding them at least until Monday, until we hit these targets here at 6,820. And also a quick look at the H4 time frame of the S&P 500. This is here a cash chart and is my new Elliott Wave count, and I must say it's a 50-50 call at this point. I was going for a second leg to the downside, which didn't happen. It failed. That here was just to shake off more bulls in order to scare them off. I also was shorting that. We were hedged now. The big question is now, is this gap here on Friday a runaway gap or in the middle or at the beginning of a wave 3? That means we should trigger 6,831 for higher targets. And then we got yeah, somewhere around 7,000, the target of wave 3 of wave 5, a pullback, and then we should end up somewhere near 7,200 if this is here a bullish breakout. The only problem I have with that is that SmartMoney kept on selling for the last 2 weeks. So all of that has been used to unload positions of the big guys. That means that alternative scenario, as wave 4 I've been waiting for the last 2 weeks, is still in play and could still come at the beginning of next week. If we keep on running higher at the beginning of next week, we have to expect higher levels into the end of November as well. And the last US market is the NASDAQ 100. It's a monthly chart, a log chart. And this was here quite interesting. What I found is that rising channels since March 2009, it has 1, 2, 3, 4, 5, almost 6 confirmation points at the bottom line here. And it is not a channel yet because it only has these 2 little touches here at the upper side. It would be much better if we see, or it becomes a real channel once we see another touch here at that upper line, but that sits somewhere yeah, around 33,000. Something I can't really imagine. In a blow-off top of a tech bubble, let's put it this way, everything is possible. And also a look at the Elliott Wave count at the NASDAQ. 4-hour time frame. It's a cash indication, very similar to the S&P 500. The big question remains, what is that gap? If we see a gap up on Monday and they continue buying that black projection becomes more likely, and we see, or we should see, levels near 27,000 by the end of November. If we see a gap down and they start selling that wave 4 scenario is still on, which I favored for the last 2 weeks. I'm also hedged here. We were putting in these hedges on Thursday evening above 25,100. So that is also secured, and if we see that alternative way, we should see levels near 23,500, or we retest these lows here between 22,700 up to 23,000. Also, SmartMoney was selling for the last 2 weeks at NASDAQ. That means all of that didn't get bought by the big guys. A quick look at gold. This is our short-term setup. We triggered below 4,065. I have to say that all these red sequences in the past at gold have been failed. So it's not 100%. These targets just have a very high probability of being hit, but they won't give you 100%. If this is now just a sideways consolidation and just a bounce for these targets between 3,946 up to 3,980. This is my minimum target area. We could see another run up to 4,181 before. If we fail to have an hourly close above that level, it becomes strong resistance, and that rejection could be used as a short entry. By the way, 4,258 is my last level for a bearish setup. If we break above that here, especially on the 4-hour time frame, on a H4 close, be careful with short. And we have a quick look at gold on the daily time frame. This is what I gave to my members right on time. I also was posting that on X after we saw that sell-off. Of course, we have seen a roughly 38% rally, and then we sold off by 11%. Now we had a roughly 40% rally in gold, and if we see another, let's say 11% to the downside, we have targets around 3,872. I assume a sell-off into the middle of November. That would also correct that primary cycle. This one here started in November last year, and this probably finishes in November of this year. That cycle started right here in May of this year. If that happens, if we see that second selling leg here to the downside, and gold becomes a strong buy somewhere near around 3,800 all the way up to 3,900 for higher targets towards 4,519, first minimum target, second minimum target 4,690, the last target above 5,000. That sequence is being triggered on the daily time frame. And similar story at silver. We had a H4 close below that red sequence here. That means targets between 45.76 up to 46.46 for silver. Next cycle low is around the 29th of October. This is a sub-cycle here, by the way, and I would favor a low somewhere around the 7th of November or a week later around the 18th at silver. And we are looking at silver and at gold here. I just wanted to show you the ratio. I couldn't really put it in the chart here, but I still want to tell you about it. You see here how gold has been always much more expensive than silver, but the relation in the past used to be 1 to 10. And we have seen here, for instance, a peak of 48, and here a peak of 1,800. That was a ratio 1 to 50. Presently, or recently, we have seen a ratio of 1 to 100. This is way too much apart, which means in the near future, and I talk about a time frame over the next 5 to 10 years, the ratio should get back to 1 to 10 again. That means silver should have much more potential than gold. I still see gold much higher, somewhere around 6,000 to 7,000 in the next upcoming years. But I assume silver to be near somewhere 600 as well. That means that ratio is coming back together. And I want you to keep an eye on that. If you are going for these metals, as I said, November could be the next good buying opportunity in both these commodities. Last chart for today is Bitcoin. I think I have shown that in my last update, where I showed these complex corrections as an A, B, C, as a flat. Now we retested that bottom here from the 10s, which was also that stock market low. We retested that on the 17th. That was the beginning of last week's weekend. We are near that subcycle low, and that projection here is still on. It just has to be shifted a bit to the right. 124,000 is still the trigger for the upside. If we get near these levels, we could see seriously levels near 150,000 all the way up to 170,000. I believe the low is in. That sequence here, that retest is saying 102,882 can be still be retested for another low, or even 100,632 is on. That red sequence here at 104,800 was holding so far, which is a bullish sign. We are also entering a bullish phase here, by the way, which can be seen at my daily chart, and you can access that at www.jcs-charting.com. You find plenty of various markets and updates, and also my setups. It's a great community, and yeah, you can ask questions there. I help there anytime. And yeah, this is my outlook for this weekend. I hope I helped you out. You can leave me a nice comment or a like, and I see members on Monday, and I see you probably next week. Thanks for watching, and bye-bye.